Hopefully everybody out there had a fantastic Christmas holidays. It's always a wonderful time of year. Except, of course, if you had any of your capital following the self-proclaimed trading genius dubbed Captain Condor, because it's been reported that they essentially lost everything on a massive iron condor bet that was part of what's called a martingale strategy. Now, you may not know that term, but you need to be able to identify it when you see it so that you can run the other direction and have nothing to do with it. So let's say you open a standard iron condor option trade with 10 contracts. Obviously, you're hoping that trade makes money, but let's say that it doesn't go your way and the trade is actually a loser. Well, no problem. It was a reasonably small allocation size anyway, so for the next trade, you double the trade size to 20 contracts so that you can quickly make up for the previous loss. Well, wouldn't you know it, that trade goes against you as well. Now, 2 losing trades in a row happens, but surely it won't happen 3 times in a row, so on the next trade you do 40 contracts. Of course, you thought it was a good trade setup, but the markets are unpredictable, and that one loses as well. So now the trading guru tells his followers, who are at this point no doubt panicking, "No, you don't understand. We've got the market right where we want it. All we have to do is double down and get it all back." So now we're up to 80 contracts, and this is going to be very uncomfortable because your trade size is now many times larger than you ever intended when you started. And here's where Captain Condor should have gone back to grade 6 math class. What is the probability of getting heads on a coin flip after you've already got 3 tails in a row? Well, it's still 50-50, isn't it? The coin doesn't care how many times you flip tails beforehand. The next time you do it, it's still 50-50. When this trade started, it was just risking a small amount of money, but because of the martingale strategy, just ramping it up as you're losing money, now it's risking the entire trading account. Remember, still a roughly equal % chance of winning or losing, but you're all in now. And when that one loses, now you're homeless. This is the inevitable outcome of a martingale strategy. In every series of numbers, in every string of occurrences, there's always going to be outliers. His strategy was no more sophisticated than going to Vegas, betting on red or black, and then doubling down every time you're wrong.